Morning traders, welcome to the Traders Lab. I am your host Tom B. Thanks for stopping by today. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Lucky. Thank you, Plato. Well, good morning, everybody. Quite a big day today. I'm going to try to get into it as quickly as possible. CPI came out this morning, and the market was underwhelmed. It was higher than anticipated and caused a substantial blowout in the ETH. The interesting thing is, after that lower drive down in the ETH, we have recovered and we have come back and just about closed the gap, I think, or maybe we did close the gap. Hold on. My chart is scrunched up here. Yeah, we closed the gap. We tested yesterday's low, and we'll go from there. Now, remember what this stream is about. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. It's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community, and you're all invited. There is no cost. There's a link in the bottom of YouTube if you're inclined. And if you haven't visited Trader Lab, it is a community of like-minded traders that have come together to leverage their collective experience. It takes a lot of work in the sense of developing ideas, statistics, sharing trades, and working together to create something better. It's built on the idea of the business of trading, not the fantasy. If you're interested in the business of trading, visit the Trader Lab. You may pick up some ideas and maybe move yourself along in your career development if that's your objective. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's get going. I'm going to give you a quick peek at the higher time frame. This is Investor RT. This is my higher time frame software. It is excellent for volume profiles, and then of course it has all the other tools, and it's quite a flexible program. It also can generate statistics and do a lot more in the sense of tools that are really outside what most trading platforms have. But of course, like everything, it has to be, what you need. And I've been using this platform since, I guess, 2009 or something. So you might say I'm kind of sticking with it, And of course, there's a lot of different choices out there. But I find this is really very good for the purpose. And for me, the auction and the profile, because of what it says, is the most key element in my trading, because the distribution of volume is what tells us what the participants think. Now, yesterday, a day before yesterday was an inside day. We had this big sell-off, and I did have pointed out in the streams that there are stops under these lows. So under here. So if we get outside, we can very well get down into these areas. So that was one element. Yesterday was an outside day, so that's kind of unusual. And what we did yesterday is we gapped, we opened lower outside a range, got some shorts in here, and then came across the range, squeezed them out, and got the stops over previous day's high. Now, when that happens, and it's just something that I've seen so many times, and you have to understand, in trading, you cannot predict anything. But there's behaviors you start to observe over and over and over again. And some of them have to do with the market goes down to go up. Market opens lower, goes down to go up, and then goes up to go down. Why might it take out this high for the day before yesterday? Because there's buy stops here. And if we take the buy stops out and then we close back inside, it is possible all we did was take out the shorts, and that sets up taking this out and whatever else, wherever we go. That's something that you might want to make a note of, because you'll notice The market goes down to go up, and then the market goes up to go down. And it does it in all fractals and time frames. So the fact is, whether it's going up or down, the market's always rotating in all time frames or fractals. Just something that you might want to keep in mind. And none of it, you can't predict anything, but you can anticipate. And I always say in the Trader Lab, you've got to anticipate to participate. That's just the way to think about it. So this is the RTH Open. We already know that we did the Acapulco cliff dive off the report, and that we have poorly auctioned area above us because the market ripped, and then we can anticipate selling initially. So this is the ETH volume point of control. That's where the highest volume is. And the way you might look at this, in especially the auction. What is this auction thing? Well, the idea of the auction is try to figure out what's too high, what's too low, and what's just right. It is shopping. And if the market gets too high, it's going to run out of buyers and the volume dries up. And you could see this very clearly in the profile. Also, if it goes on the other way and it gets too low, the volume will dry up because it's not staying in that location. It's being rejected. And then where the high volume shows up, that's where most of the business is taking place. Buyers and sellers are agreeing on price. Now, the thing about this is it's not one and done. This process is taking place everywhere in fractals or consolidations. And a consolidation really is the same process in micro. So in other words, when you have a little chunk like this, what is this? Well, this is too high, this is too low. We ran out of buyers, we ran out of sellers. The retail price is in here. If we break away from it, now we're rejecting the price. So the market is a price discovery process. So let's see what the first trades are. So for me, given everything, I was looking for short initially on a retracement. So let's see what we get here. So there's a couple things. If the market is short, remember the market, write this down. Market goes up to go down, market goes down to go up. Sounds pretty simple. The only problem we have as traders is what's it going to do? Where is it going to do it? Other than that, it's pretty clear, especially in hindsight. But while it's going on, it's like, what's going on? That's kind of what I'm doing. So when I think about this, I'm going, well, here's my open. I know the market is short. I know the possibility exists I can get some more selling, and then subject to how this plays out, I might get buying or short covering. So let's watch here. RTH open. 1 second. RTH open. Market pulls back. This is called developing volume point of control. This is the retail price from the ETH. So let's just see what goes on over here. This is the first trade I took right here. I took this break, and I also had a level sitting down here, and this is not a naked volume point of control. I don't remember. I really can't remember at this point. Maybe it was. 22.5. So this is my target coming down. And this is a high volume area that we had left behind last time we were here. The nature of the market is to come back and check locations. So this is a location. So for me, the short was targeting this. So let's see how it plays out. So market opens, I get a little rotation. This is the level I'm leaning on. So I come up here, and this is a trade, just a trade, nothing more. So I'm looking for a trigger right here. So I have sellers here. I have my developing volume point of control here. My buyers are here. My sellers are here. When I break above these sellers, that means these buyers and this seller, I should say, and that seller, they're underwater once we break here. Now this level here becomes support right there. So I see a buyer here, and I know my sellers are there. Now the question becomes, are these guys taking control, or are these buyers going to stay in control? Now I don't know the answer. There's your mid and VWAP. I get my buyers. Now I get my sellers here. So I'm thinking, no, this doesn't look good for the longs, but that's good for me if I want to get short, at least maybe, right? Here's my location. So right here, I'm ready to, pull the plunger, but my seller is here. So I'm looking for a trigger. I do not have a trigger. I have a location. There's an old saying, and I like to repeat this, but trading is about it's like real estate. Location, location, location. So in the Trader Lab, structured trading is about knowing before the market ever gets there what you're going to do and where your trades show up. It's not about playing a video game and trying to catch all these little rotations. I mean, if you can do that, that's great. Most retail traders attempt to do that and they go out of business because they're responding to dopamine, adrenaline, and FOMO. And that'll take you out of the business. So the thing to do is understand what other traders do and even what your impulses are. Your impulses are the things that you have to learn to manage. So, and that's all, these are areas we concentrate on in Trader Lab, plus the 60 PDFs of structured trades that I share all the time. So here we have, I'm looking for the trigger. Now, if my seller takes control here and I break and I test, I go short. That's my trade. What happens at my location? I get above it. So I'm going, well, I don't have a trigger. I guess there's nothing to do here. So now I have sellers here and I have buyers here. I'm above the seller. As far as I know here, going up. Except I'm at a location. So what am I going to do? Well, let's see what happens. So I have not had a trigger yet. Notice it's higher, higher. And here's my micro high volume. It's right here. So there's two possibilities. And I always get a kick out of it. And I'm sure you do too when I say this. Well, it can go up or down. You're going, wow, he's brilliant. No, but here's the fact. This is what's happening. This is language. I don't use indicators, so I have to speak language of the market. But the reason I don't use an indicator is I have an indication of behavior based on the participants. And if this is going higher and I'm pushing away, it is saying this is all too low, too low, too low. And if I push away, it's too low. I'm at a location. It breaks low. So right here, I have my first trigger. In the micro high volume, I'm going to draw just a little line just so you could kind of see where this comes in. And it's matched up right there. Now, this is trading in fractals. These are fractals. And fractals are these little rotations. Well, if I'm looking to get short, I've got to use the shortest time frame or fractal that I can read to attempt to get on a trade. So this is now my buyers were here. My buyers are here. And as far as I know, remember this, my sellers are here, but my sellers were there too. They got run over. So as far as I know, somebody, somewhere, break low. This sets up a short for me. And I can lean right here. Okay. So that's my first trade. And I'm going for down below. I'm going for this and this. So I have this and this ETH low. So as far as I know, that's where I'm going. What do I know? By the way, when I say what do I know I don't know. So I'm not in the prediction business. Once the trade's working, my job is to get risk neutral. So I just put the trade on and then I cover my risk. Now remember what I said at the top of the stream. The possibility exists for early selling and then the possibility to rotate around and potentially take out the opening swing high. And I always put this in Trader Lab. I always talk about this for opening trades. Opening trades are a specialty, and it isn't just another walk in the park. Because if you want to, if it's logical too, big sell-off, market short, everybody's short, and then you get the late sellers to the party. Well, if these, and I know this in my opening trade, so it's a specialty. we have three trade plans or pieces of plans in the Trader Lab. We have what you might call your directional trade or trend trade or directional trading. We have a mean reversion trade, which is a rotational trading plan. And then we have the opening, and the open is a separate plan. So for me, this is a structured trade, and I'm looking again because statistically, I have a good probability of this and this. So that's where I'm looking. So, and then it's trade management. So let's talk about trade management while we're at it too. So again, I know my possibilities of getting squeezed out are high. So I take it's almost like, so wherever I get in, so my entry is here or here, right? Here, right? There. Now, this is hard for us to do, and it's hard for me to do. When I get my trigger, I don't want to sell it here or here. I want to sell it here. So I look at where the buyers were there. This is a trigger, and they're specialties in the sense of they're isolated processes or micro auctions. That's why I call them micro structures. But inside of this, buyers and sellers are evaluating what's too low, what's too high. And when I break from the volume, that is the retail price. It's basic. Think of it like shopping. They're leaving the store. I'm not going to pay that. What are you, crazy? Now, if they won't pay this price and I break under the last area where the buyers were interacting with the sellers, that sets up my short. Then I have to get risk neutral, and my risk is from entry to stop, and my stop has to be, I usually put them 2 to 3 ticks above whatever the highest, because the market can come rotate up, pick a few stops, and the sellers that were here could sell it again. They'll go, oh yeah, here, have some more. So I have learned through pain and experience that you don't just stick your stop here because you're risk adverse. You need to understand the business you're in, and you also need to vet and know, should you keep your stop here? Or should your stop be 2 to 3 ticks? And does that increase your expectancy? All these questions need to be answered by the work you do. So, because the market is random, so it's going to take your stop no matter where it is, and it's also sometimes going to 1 or 2 tick you. It's going to do whatever it can do, it'll do. Because that's the nature of randomness. But you need to know over time how you manufacture this edge, and then you got to stick to it. So that's what I do, and take my lumps like the rest of us because there's overhead and cost of production. So stop up here, entry here, small stop. I can handle that. It's around 2 points, 2.5. Get scaled, get risk neutral. Now trade management going, down here. VPOC migration, looking good. This happened here, and I'm going, this is great. Yeah, well, it's great until it isn't, but it's great. Now let's look at the language of the market. What's it saying? It's saying the current price that we just left, this is too high. Now I have a new retail price. What this is saying, now we're moving directionally. I paused, and there's more volume here than there was in any of these other locations. So it starts at 0. So as we're moving along and it's directional, there's no volume. I mean, it's not concentrated. This yellow line, it's called the developing volume point of control. It's the retail price. Now, here's the other thing. In here, it's the same, except this is the retail price in here. For the whole developing RTH session at the moment, this is the highest volume. So when I talk about a fractal, I'm talking about, as you think, multiple time frames. So in all these rotations, there's going to be areas of high volume. There's going to be areas of low volume. In micro, like here, this is microstructure. There's high volume right here. And as long as I'm going down, I'm having a good time. And if I can reject this, I can keep going lower. So I'm going to label a variable high volume node. And let's not forget the scenario. This is a specialty trade. It's called the opening trade. If you don't have a plan for specifically for the open, you're a gambler. You have to have a vetted plan. You need to know how vulnerable this opening swing high is, because everybody who's short or got short in this leg has their stops right here. Think about it. So if you trade this, are you going to be maybe uber careful and not hang out too long? So let's watch here. This is too high. I break low. Right now, this is my resistance right here. So, and what I would really like to see is that it keeps going down, because that's my trade. You know, what I like to see and what the market does, has nothing to do with anything, because this is trading and it's 100% random. Write that down if you haven't thought about it. And I understand we all want predictability and certainty, and that's all psychological. It's nothing to do with the business you're in. You can't have it in this business. As soon as it comes across here, takes this out, I'm out of my trade. That was it. So yeah, I got, it's like a pizza party. So now what? Now I remember my opening swing is here. So now I don't take a long. I'm not done with shorts yet. So I get VPOC migration. So what does this say? Let's read the language of the market. If this is a retail price and I got all these guys in here trapped, and now coming down here, so let's try to read it right here. Sellers are here, buyers are here. Who's in control? Why did we go down from here? Sellers are here. This delta got absorbed because there's we got some selling icebergs and we got stops coming out. Thanks for playing. Gonna send you a gift basket. Too high. Sellers are below the buyers. That suggests lower. Okay, let's look at the microstructure. Just going to show you how to potentially read this. Sellers are here, buyers are here. If this buyer can get over this seller and these sellers, then potential trouble. Doesn't happen. Sellers are below the buyers. Resistance is here, okay? Because this is where the sellers are, right there. Otherwise, why didn't it go higher when you had that green bubble? That's delta. But delta doesn't mean to buy. It means there's an aggressor. That's all it means. Now, what happens? Why would the market not go up if we see an aggressor? It's because there's the passive side, the side you can't see, the limit order book. That's why we have a limit order book. They're selling here. They're passive. They're going, I'm not going to sell this. I'll tell you what, if you give me this price, I'll sell it to you. Otherwise, I'll call you later. Sellers are below the buyers, going down. So right here, everything is fine. Your stop can be here, above this, or here. It's all up to you. Sellers are below. So I know sellers are in control. We're below this buyer. Sellers are in control. Right here, everything is, as they say, copacetic. Now, sellers, I have a seller here. I have a seller here. Now, right here, I need to stay below this. Sellers, 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 buyer. Right here, need these sellers to hold the line. Notice where the resistance is. So I got a buyer here and I got my sellers there. This is the moment of truth. Because if the buyers come above the sellers, then we can squeeze. Or right here, these sellers are going to overwhelm this buyer and we continue down. Here's where it changes. So right here, and this is something everybody has to vet. This is a trade management opportunity. And again, nobody knows. We might only just come here, come back here to where the sellers were here, and then it can do anything. But I'm conscious of the opening swing high, actually, not low. Got to do it right. So for me, this trade is over. And you would be out either here or if you're very aggressive over here. But let's assume it was here. Okay. Now, VPOC migration. What does this say? The language of the market. This is too low. Now, I don't know if we're going to come back here. It's not my job to know. What I do know is I don't want to get short again because my stops are sitting above this opening swing. There's the stops. Now, once we come out of here, the question then is going to become, is that it? And then we come back down to here, and we have the VPOC here. What happens on a pullback? So I'm still thinking shorts at this point, that this was just a stop, pick, and a squeeze, and then I'm looking to come back. So I'm looking for a short. But I have to get, this is important right here, VWAP, mid, and this. So if this is too high, because all I did was take stops out, that's all this might be, then I want to see the behavior and can I come back across? I tested here, which I needed it. I wanted it to come under because I know that's too low and this is the new retail price. Remember what happened over here? This was too high. Now this is too low. Now this is the retail price, squeeze. And either we come back here and break low, or we come back here and break high. You see, in other words, when you come outside, it sets up two possibilities right here. And I know this is going to be confusing. It is always confusing because it's not clear. And that is, if we come outside and this is the retail price, and we know this might be underlined too low, then what is this? This is called mean reversion. And what it is you come outside here, and if we don't get below, then here's the VWAP in the mid. So if we pulled out here, we have a structured trade called VWAP to VPOC. So that sets up the potential to come back here and then to take this. And then if we come back in, this is support, or we're going to blow right through all this and come down here. So that's what I know. So this is a potential long, which I did not participate in because I wanted to see what happened after we got through this. So we get through there, then I'm going, okay, if I rotate down again, I have support here, and if I get under here, I can go there. That's what I know. And look at the buying. So now it's off to the races. VPOC migration. See if there isn't anything familiar here. Come back and test. VPOC migration. Now in Trader Lab, this is a potential continuation trade. If it's, but your risk is out to here. Here's the volume right here. Here's the pullback to this structure over here. VPOC migration. I did not have a lot going on here because once it ran, I don't chase it. I just wait. Trader Lab traders were long. I did not after that early trade. So I'm looking now for a place to get in. I get VPOC migration. Right here is now too high. So now I have a couple trades. Let me show you the trade now. Now, some of these are a bit advanced, but they're all Trader Lab methodology, which is really auction-based. So it's a matter of trying to find what's too high, what's too low. So what do I know about this area here? Well, if I leave it, it might be too low. So let's see the behavior. Is there any, can we see behaviors that we can use based on, so right here I have a sweep. Let me look a little closer. This is a microstructure, but there's no, I don't have a short or anything here. I just don't have anything here. Because I'm outside the opening swing. The overnight mid is here, which has a probability, a decent probability. We have yesterday's low, so it looks like maybe we're going to fill the gap. So there's no shorts for me. The only thing I want to try to do is find a place to get long. I've got VWAP, I've got mid, and I've got my VPOC. At the time is over down here. So let's look. So I get VPOC up here, VPOC migration. So I'm looking in this area for a possible long. epoch migration, very choppy. So here, once this shifts up and I break low, I'm then looking here for possible trade for a long. Let's see what happens here. Back to the opening swing. I would love to tell you that I got this trade. I didn't get it. Did not get it. Just did not happen for me. So let's continue. Now this, once we break above this, this becomes support. Now we have high volatility here. And that makes this pretty difficult, I think, because when you break above this, if you're trying to buy this, which is really the area of support, you can look at the volatility. So you could be doing, quote, the right thing and still get stopped out. So that's just part of the random aspect of this. Not much you can do about it. So out here is an outside edge. This was too high. And it's a concept like support and resistance, you know. So I was not able to get in on this one. Notice how it acts like support. This is doable here. And then we have this at 9:30, wherever the first hour's high is. And I'm looking at and that's going to be, well, it's actually right. Got to be up here someplace. This is correct, which I think it is. The first hour's high has a high probability of getting taken out, and so does filling the gap. So this is a viable long if you're in Trader Lab. This here was not. Break high, pull back to support. Your risk is under here. So if you try to get long in here, your stop's got to be under here. Again, it has to fit. That's more than what we typically like to do. If there's such a thing as liking stops, right? So then it's either a long here or you have no trade. And the reason I'm saying it is or you don't have one is it's a personal thing as far as what's your risk. If your trade plan says I can't take more than a 3-point risk on a trade, then it doesn't fit. You can't do it. Just nothing to do. So let's see. So we come up. This is a stat. Take out the first hour's high. Yesterday's low. Stat. Fill the gap. Now, and I think I narrated this in Trader Lab. I can't remember. We have two structured trades that are possible here. One is the IB continuation trade, and the other one is called the IB failure. The IB failure, so there's two possibilities. You buy a pullback for continuation because we're inside yesterday's range, so that's a long. And the other part is if we fail this trade fails, and right now looks potentially excessive, then it's a short for something called mean reversion. And I took a long, and my idea was to try to get back up in here for a scale. I took a stop, okay? When that failed, I turned around, I took a short. It was as quick as that. There's nothing more to it. Now, and where was I trying to go with this short? And I narrated this in Trader Lab, was to 40, right here. And that's in the Trader Lab. That was my last trade. And I didn't get out at 40. It was right here. So I left a couple points. And that's because I read this behavior. So I just blew right out of it here. And then it went to the target. That's my last trade. Now, also in the Trader Lab, I narrated along from here, and the goal of that trade would be to scale here. And now I don't know where is it? I don't know where the market is at now. So those are Trader Lab structured trades. And I think, are we kind of current? Oh, there you go. So that's it. So not a lot of trades, you know. I mean, and that's not a problem. I think it's a good thing, because if you're going to put risk on, don't, don't put on frivolous risk, put on intelligent risk, and put it on with structured trades. And everybody takes stops. So we, remember, what is a stop? It's not a personal failure or you not knowing what was going to happen in an environment where you can't know. What a stop is overhead and cost of production. Remember how the casinos operate. They pay the gamblers. They don't get depressed over it or think it's a personal failure, because they can't control the cards coming out of the deck or how the gamblers play the cards. They only control the game that they play that has an edge. So if that's the case, that's what we're doing. We're in the same business. So if you're trying to make this business something it isn't, that's not so good. We have a target here, 88, 86, 88. This is our target for this long. So the long is from 40. You would be managing it, and you're going up for this. So 40 to whatever. And it doesn't have to ever get here, and it will rotate. And that's where trade management comes in. So let's look over here. Sellers are here. Buyers are here. And here, what I find is useful is these high volume nodes, because every time you see a high volume node, what it is, it's an auction. I'm not paying that. Yeah, but it's on sale. And inside of this is the volume. If I leave the volume, you see this little breakout right here, and then the pullback, it's a buy trigger. Now, it doesn't mean you get long here. What it means is you know that this price at the moment is too low. So you can trail behind this. So let's look at some more of these. Here, what happened here? Sellers are here. Buyers are there. That's why you get this. They were absorbed. Now what? Buyers are here. Buyers are here. I get my sellers again. Where did we leave? Right there. Where were the sellers? Right there. That becomes support. Boom. You see, you could kind of use it that way. So, and one of the things we all have to be aware of, if you break apart the components of a trade, a trigger is part of a trade, right? Everything else comes before the trigger. Trigger's the last piece. But we can use triggers also for trade management, because if we get a reversal trigger, subject to how we manage our trade or the fractal or time frame we're in, we can just use that and be out of the trade. Your job, at least what I found, is if you accept the market's random, then we can't predict. I know there's a level up above, but do we know how or if it's ever going to get there? We don't. So if you're managing your trade, and you will get taken out of your trade, there's no way around it. Here is high volume. There's a break. We're still above this. So right here, the trade may be over. So right here, there's buyers. So I got buyers here. The sellers are in control up here. Sellers. Now right here, you could be out of the trade. Buyers are still in control. It's all up to you. There's no perfection. You're not going to get all of it. I mean, I'm sure you all hear from traders and some of these internet gurus who sell the bottom or buy the top, and except they're going to tell you they sell the high and buy the low. Well, I don't know how you buy the low. I can tell you, I've certainly bought the high of the day. That was pretty exhilarating. Fortunately, that doesn't happen anymore. But back in the day, when you're learning, you think, oh, a breakout. How a wonderful thing. Yeah. How'd that work out for the shorts this morning? Not so good. So this trade is over. if you're trailing. So, and here's the thing I want to caution everyone about. Triggers are not trades. They're just micro auctions. You need to be thinking in multiple time frames or fractals. These, I call these fractals because they're not related to time. They're related to auction, buyer seller. So it's a fractal. It's an auction. It's not a, oh, I got 5 minutes. Let me look at my watch before I know what's going on here. So here's a sweep. Often when I see a buy sweep, it suggests the potential for counter rotation. That might be all you get. Nobody knows. So right here, you could be out of this trade right here and just forget it. Go on to the next trade. Do you guys have questions? I'll come up and take a look because I don't have anything here. This is our target, not a recommendation, but that is structural and it's based. And there's something else I want to show you too before I look up at the questions. This is where we broke from. This structure. Let's go back. Swing high, swing low. So this is the outside edge on the high side. This is the outside edge on the low side. And then we are rotating inside. This is a big consolidation, okay? The highest volume, let's think fractals now, for all of these days is right here. And the market has a tendency in all time frames and all fractals to come back and check the volume. So we broke away from this and we took out, we got some stretchers and carried a few people out. But now we've come back in to this range. So this is the sell-off from last Friday. Inside day, outside day. Pick the stops at the high of the day. Suggests potential for lower. Come back inside of this. Where's my high volume in this time frame? It's right there. So 87, 75, 88-ish, and it's not a recommendation. But that would be the same thing as returning to the retail price. So we found too low, and now the potential is to come back to what the market tends to like. I hope that makes sense. So that's where this 87, 88-ish is coming from, which is here. Okay? So that's why it's a target. Now, it doesn't ever have to get here. It's, that has nothing to do with it. And the other part is, how does it get there? And do we have trades we can take towards that? Now, this is where it's trade plan specific. Because if you don't, even though that's a target, the rotations are random. So it's not like, oh, I have to get long, I have to get long. If I get something that gives me an advantage, like an outsized rotation where I can get risk neutral, then I would consider a long because I have a statistical probability. But I can't buy it here. And if it keeps going, then I don't have a trade. My job is to wait for the trades. And if I have to sit here all day, then I sit here all day. Because if I start making it up, I'm on my way out of business. The door hasn't hit me in the posterior yet. This makes some sense. So even though I can see the behavior, even though I have a target, which I already explained, I cannot trade this. Unless I have a vetted structured trade for it. Does that make sense? Guys, do you have questions? If you're in YouTube, please give a like. I like to see likes. And I appreciate you guys stopping by at Trader Lab today. If you have any questions, post them. I'll do my best. And if you're in YouTube, if you find this interesting, there is a link down there. If you're interested in visiting Trader Lab, there's no cost. And it's a terrific community. Well, Duzman, it's up to you. I'm getting a question, would the IBC or IBF qualify? Well, if I anticipate based on the context that the first hour's high is going to get taken out, and which doesn't mean it will, in this context, yes, yeah, then I'd be aiming for it on any downside rotation because of the statistical probability, even if it's not set, and also because I had other targets. Yesterday's low filling the gap. So even though this might not have been done, I'm still going for this. And if I know if I can get inside the range, and by the way, when you come up and fill a gap, there's going to be profit taking. So a reaction in here is not unusual for it then to counter rotate. So, and I think, so this pullback here, the 40 actually, but this sets up so you guys know. Now this is a structured trade. It's a bit advanced. The short was, which I narrated in Trader Lab, was from wherever it was up here to here. The long is from here to there and then hold or manage. So from an auction perspective, this was the long, and then you can be scaling there. The next target is there, and then the next target, depending how you manage your trade, is here. So this is structured trading in Trader Lab. Now, one of the problems we have psychologically is holding this trade. So you have to have a trade plan, and your trade plan can say, well, we know this is the target, but there's nothing that says we're not going to come down to here before going up there, if we even do. So a trade management plan has to work for you psychologically. Because for me, if I get taken out of a trade, if I'm with trade management, that might fit my psychology much better, even though I'm going for this, versus having it come back here and all this MFE evaporates. Which one of those would you prefer? And it's not on the last outcome, it's on all of the trades. That question has to be answered before you ever put a trade on. Does that make sense? So Duzman, yeah, I kind of look at the IB, context is number one. What was the context? We found too low. So I'm then aiming for targets above me because I found my buyers. And I didn't get the ETH low, and I didn't get my target, which is where I was going, which was this and that. So my short was viable for me. And there's also stops over here. We didn't get them. So all of this was material. Now, I don't know it until it reverses. And then even then, I don't know. Then it's trade management. And then you go, oh, that's nice. What else? There's nothing else we can do. So, but once I understand what happened here, and I can't know that until hindsight, then I can turn around and go, okay, I've got my opening swing high. Remember that? And we're going to squeeze. So then it's what happens. Do we squeeze and then come back, or what? So that's what kind of sets it up. And then once we get rolling, then we have our IB. We have our IBF, which is a short mean reversion trade. And then we have the 40 on up. And then again, it's just a matter of, how you manage your trade. And are you going to sit through these rotations? By the way, there is a statistical probability, and you have to bet these for yourself. But to get back to, where is it? It's only about a 32% probability to get here. It's not a high probability. But that is over a large sample size of statistics, over 953 days. So that doesn't mean, but here's the other part about statistics. They're just statistics. They're not anything more than maybe. What I know is what's number one in trading, at least I'm going to say for me, it's something called context. If the market, and this kind of came about from when I was building trading systems back in the mid 1980s. Because I was trading, and I was a trend follower and a swing trader. There was none of this day trading. It really wasn't. I mean, if you're going to day trade, you pick up the phone, call your guy on the floor. I mean, that's how he did it. And you would write your order on a piece of paper, literally. Hard to imagine. Timestamp the thing. Pick up the phone, call somebody, tell them to get your fill, you timestamp it again, all this kind of stuff. So day trading was just not really good. It just was very cumbersome. So we didn't do it. Or I mean, you could, but it was not so good. So and for me, I was trading across asset classes back then. So I had a lot of different markets I was trading, so I systematized it. So the point was, context was a conditional statement, and it went like this: if this, then that. If not, then what? If the market's going down, if this going down, then what? ETH low and this target. And then the other part of that is, if this, then that. If not, then what? Then what is? If not, then that. Okay? So that conditional statement sets up like branch logic. So in the Trader Lab, I talk about narrating the condition of the market. And you can do this in any time frame or fractal. But the idea of a time frame or a fractal, if you want to think about it, the market's constantly rotating. It's always rotating because there's like slop or noise. It just sloshes. And in the ES, typically it's about a 6-7 point rotation. So just the noise. That's why if you're trying to be a scalper or something, you're just trading noise. And that may or may not work. For most, it doesn't. And most retail traders gravitate to scalping because they think it's easier because of the win rate. Gee, if I only need to make 3 ticks, I'm going to have a high win rate. And they're focused on the wrong thing. It's not the win rate. So if this, then that. If not, then what? Well, if not, and this is the conditional statement, then what? Well, if it changes, then I have to change my plan and only take longs unless I can also trade counter trend because I have a plan for it. I do have a plan for it. And it was the IBF, which was a mean reversion trade. That's why the 40 was the target. It also was the long. So I'm just saying this is a structured trade in Trader Lab. You could learn this. But here's the other thing. If you're looking for action, Trader Lab's not for you. Because Trader Lab, the idea is about career building and the business of trading. Trading is not what most of us probably think it is. I mean, it can be whatever you want it to be, but you have to also have a statistical edge. And if you don't do the work to know where your trades show up, you won't be in the business. That's unfortunate, but that's the reality. And that's why 90% of retail traders, according to statistics I've read, don't stay in the business. Now, the other thing that's really the catch-22, by the way, you notice the icebergs? I really forgot to tell you about this. You see these icebergs up here? 1,000 icebergs? What is that? What did that create? That created our IBF down to here. You see? This is how you can use the stop an iceberg detector. So this is important information. Then this is location based, and icebergs are over in here, and absorption. So you can read this with an order flow tool. So now we're heading towards our target, not a recommendation. And we have our liquidity stacking. So let's watch this. I'm getting buy sweeps, which suggests the potential for counter rotation. All it means is rotation. It doesn't set up a short for me. It means possibly rotation. And so far, what you see happening in the auction is we rotate, we get a retail price. If it's too, and it's right there, if it's too low, we leave it. Then we chop, chop, chop again. Right here, and it's right there, and you can see it over here also, is a retail price. It's an auction. Chop, chop, chop. Chop, chop, chop. Here, let me try to open this up for you so you can see it. Now remember, counter rotation might be on the list here. Not a recommendation. A rotation doesn't mean you should be trading. So the volume is like here, there, too low. Now, low volume, outside edge. This is too high. There's the node. Too high. There's the node, right there. If I pull outside, out here, and my support is here and there, I can buy it if I choose to rotate back, because I am trying to go here. So I've got this. So in a way, it's kind of like, this is going to also sound strange. A lot of this is strange, but this is like gravity. It's like if this was the moon and this is the tide, it's being drawn towards the volume, because the market is, it's all about volume. If high volume was here, think about this in the store. This is the fair price, and we left it. Well, if you find too low, in other words, it was priced too low, then where might we come back? How about the retail? And in this higher time frame, which is an intermediate time frame, this is the fair price. So this is where we're trying to go. Don't know. Not recommending it, just saying, hey, maybe. And this is our sweeps, and we're looking for counter rotation. Now let's watch this. Questions, please post them. Thanks for your patience. I'm trying to cover a lot. I hope it's not too confusing. By the way, the thing with the context and the conditional statements is a way for you, if you have a trade plan, it needs to be a conditional plan. What if this, then that? If not, then what? If I see a sweep and liquidity, if this and that, then what? Then potential counter rotation. Now what? How might I use this? If I get the counter rotation, where's my stops, outside edges, and what might I do? Well, if I come outside and pick off stops, because retail traders are trailing their stops, then I might consider, maybe, if it's part of my plan and it has an edge, to get long for the target. And it's not a recommendation. I mean, the market never has to go here. It could do it tomorrow, or it may never do it. I mean, anything can happen, right? This is trading. But let's look at the structure. I'm seeing these buy sweeps, but what else do I see? Look at the liquidity that came into the book up here, you know? So if I'm getting this liquidity, it's like, and there's like 900, I think, if I can see this. Let me see if I can open this up. Yeah, almost 1,000 contracts got dropped in here. That the market will react to that. Now, we don't know anything more than there's 1,000 contracts. We don't know if they're going to pull. We don't know if this is just a player putting this in the book to create a response so they can get on the other side. See, these are the things we don't know. So the fact that this shows up doesn't mean get short. It means, and we have a sweep. That's why I'm saying is we might underline, and all I always have, I'm always going to say it might, because there is nothing else beyond maybe. It might counter rotate. So then I already know if it counter rotates where my outside is. It's going to be out here, and the stops are out here. This is called a low volume zone, or node, I should say. So I'm just going to label this, and it's not an area for action. It's an area to observe, because the outside edges of distributions, which is what this is, have stops. And the stops, so you know what creates this, is the fast move leaves there's no volume in this thing. I mean, it ripped, it didn't auction. When the market chops, it's a consolidation, it's an actual auction. When it rips, it didn't get a chance to auction. So now if there's longs in here, their stops are going to be sitting under these swings. So if I get a counter rotation, I can rotate into the stops, and then we want to see what happens down at these outside areas. So out here, the high volume over here, and maybe even out here. So it's just an area. So here's your selling. Let's see what happens. Sort of the slippage. I'm getting a question about the big S&Ps when I used to trade them. No, no, it was very efficient. But basically, um, they just fill them while I was holding on the phone. So that is not where the slippage was. But it was a different time frame. So the slippage was more. Just trying to remember. Well, in a fast market, there's always slippage on stops and stuff like that. But I often what I would do is either I'd use limit or what we used to give the broker. Trying to remember what I don't even remember the order type. It was so long ago, but we give them a range. A couple ticks. So, but I don't even remember how to say that order. I haven't done that in so long. Big Zell, hi, welcome to Trader Lab. Thanks for stopping by. The volume pointer control resets at RTH open. So it has to be at time. So when you go over to session volume profile, you check the reset and you go to reset configuration. It's got to be at time and your local RTH open. So this thing just starts, then it resets. So whatever. And the ETH, this is the full session volume profile. This one starts at 5 or 1700 at time, which is ETH open for me. So they each have a different reset. The session prices reset at RTH open. The VWAP resets, all that. So whatever is time related, specific to a session, you need to have those checked out. That might be why it's different. So you notice the behavior. Sweep suggests the downside move. Liquidity. Remember what our suspicion is. The downside rotation. This is Trader Lab trading. Now, here's the other piece. This is not a short unless you're a short-term rotational trader, which, of course, that's up to you. That's the fantasy. But while we're all living on Fantasy Island, getting back to the real world of trading, subject to, again, a vetted edge, we're looking for the stops to come out. And now we have, this might be your outside edge. And then we're looking to come back over here. And it's not a trade recommendation. Let's watch it. Let's just see what it does. See, the thing that's always hard in trading naturally is where is the outside edge? So we have a sweep here and we want to be watching the structure. So this is an outside edge, remember? So if this is too low, then the possibility is to come here. That just for starters. If this is not too low and we can't break above this volume, then we're going to fall out. So now we have a sweep. Microstructure is here. And then we're looking for potentially a trigger. Now, this is not a trade recommendation. It can fall out either side. The idea, of course, was what? Rotation. Stops. Outside edge. Remember, I said it was going to come under. Now, back here. If I clear that, I'm back on the train. So let's see what it does. Not a trade recommendation. This is behavior. Now, part of a qualified trade plan is having enough range. So so we have all these elements of a trigger that just came together here. The sweep, sell stops coming out. Where'd they come from? Our good friends, the retail traders just like us, who all kind of do the same thing. That's why their behavior is predictable. That's the only thing I can predict. That is what other traders do because we've all done it. So I think about all the things I did, putting a stop here. Well, how many stops do you think have piled up here and here? Isn't this a double bottom? There and there. If it's a double bottom, isn't there stops pulled up here? Isn't there? And if I take it out and I have a sweep, doesn't that set up a potential long to come back here? And if I can get through here, this is my resistance now. And I got this thing sitting up here, don't forget. I have to get through here, then I can continue to my target above. If I don't, then like everybody else in the trading world, I'm going to pay and take a stop. That's it. Not any deeper than that. That's the business you're in. If you want to be in the business, you got to take risk. You're going to pay the other players just like the casinos do. But think about, you're in the casino business, so write that down. When you go and think that this is a video game and it's click, 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 you're not in that business. I mean, you can be in the business, but I think it's better to go to casino, get the cocktails and the ticket to the buffet. We want to sit on the house side of the table. The only way you get to do that is only trading when you have an edge and you understand how the market works. And most of us are depending on indicators, to define that for us. That's fine. If that works for you. For me, it didn't work. It actually was the problem. So, and I didn't know that because we all have winning trades. And I think it's really important to know that the fact you have a winning trade takes no skill. That's like sitting down at a slot machine and winning. How much skill does that take? It's no different. Support is here. So let's watch this. Our micro high volume is sitting right here. This is our support. Remember where our resistance was? It was there. It's right there. The trade fails. It's a stop. That's it. Resistance is there. So this trade is going to fail. That's it. So let's see now what we get. High volume is right there. So this trade would be done. I always give them a couple ticks just because we might come out and test and then come back around. But the thing to take away from just little conversation about this potential trade is that it's called mean reversion. It's an outside-in trade back to there. And that's where we got. To go higher, we have to clear that. And we can still come out here. Remember, it's always 2 to 3 ticks. So I don't think, let me see, where are we here? No, we didn't get stopped out yet. But it looks like it might fail. This has to be the low for it to go higher at this time. Because then it's going to exceed. Because the sweep is here. We only one ticked so far. So it's, this is really where it needs to hold. I'm still seeing the sellers, so we got to see if the buyers are here. Doesn't look like it. We'll see. Let's just watch this little thing right here and see if we can, if we don't fall out here, which, don't know yet. Looks like it's going to, but, we got to clear the sellers that are here, and then we got to clear that. That's what the scenario is here. There's a buyer above the sellers. Sellers are here. Right now, the buyers are there and here. We need to get above here with the buyer. Otherwise, the sellers are still in control here at the moment. So this is your little shootout between the buyers and the sellers. Sellers are still in control. This is key right here. So we know we have buyers here, and we know we have sellers here, and of course we have sellers there. So now, are the buyers able to overcome these guys here? Let's watch. This is microstructure. So what I do with this is, first of all, my long is over here, right? And the other part is it's 2 to 3 ticks under. So the stop is not hit. If I can come above here, then I got to get, it's like sequential. It's like I got to get above this. If I get above that, I got to get above there. If I can't get above here, I'm going to fall out the bottom. The trade's going to be over. That's as deep as this gets. There's nothing more to it. So we don't have to make it complicated. It's already random. So why complicate it? It doesn't take away from the randomness. So this trade looks like it's about to go south. So this trade would have failed, okay? Because it had to clear this. Now let me speak about something else here. In fact, this isn't a trade, it's a structure. What it is if what you have to do, in my opinion, is this structure is resistance. So if you're getting long here, you already know that the sellers are here and the high volume was there. So if you get a long in here, this is your resistance. Now, here's the other piece to this. If the range from your entry to the resistance was 8 or 10 points, it's the same trade. If it's not within your ability to cover your risk, which is 2 to 3 ticks under here, then it doesn't qualify. This is what I was talking about, the branch logic, that it's if this, then that, if not, then what. You can have everything that's qualified except the range. If the range doesn't fit, then you don't have a qualified trade. Then you don't have anything to do, you know. So if you can execute here and somehow get scaled, you know, and it has to be not at the volume. It's got to be like 1 tick ahead of it. I don't think you could trade this, you know. I can't, but I wanted to point out to you it's a structure. Now, I'm not done with the longs. I'm not saying maybe that's the worst idea on the planet, you know. Now, we did read the counter rotation, right? So that's auction market theory. The idea is if we think the trend is up, maybe at the moment, then all we're going to try to do is try to find an outside edge for continuation longs at the moment, unless we totally fall apart. So we have to come out here. So what did we do here? We looked at this rotation and we tried for a long. Okay. Or you would try or you wouldn't. Now we're coming out down here. So I have another outside edge developing. And I have stops here. You always got to look left. And I got stops under here. So now I'm going to be looking out in this zone. And now if I get long, I still can come back up here if I get through there. So let's just see what it does. These are not trade recommendations. Everybody takes stops. This is weak. This is a weak low. So this has a good chance. And I can't give you a probability, but think about what's happening here. Stops are here. Stops are here. Where were the stops? Stops are up on this side. So if I come down here, I got stops under here. So because this is set like this, I cannot get long here, even if it goes without me. Because for me to want to think about a long, I need the sell stops to come out. I hope that makes sense. In the meantime, do you have questions? Remember, this is my area to be looking. I'm going to label it. It's right here. But they say no cigar. Just going to label this so we remember where it is, and it's right there. So this one, I'm going to leave that there just so I don't forget we've got this. And now this is an outside edge. I would like to see is that we get under here and we rip some stops out under here, and then we mean revert. That's what I got at the moment. How we doing? Nick, what are you referring? I think you're referring week low. Are you talk? I'm not sure what you're referring to. This, if you're referring to this, uh, I don't think we ticked that, did we? No. Um, if you're referring to this one, it's weak because there's going to be stops pulled here, and the nature of the market is to come into these stops and then reverse. So we had 165. I can't really tell if we got here. Guys, did Trader Lab, can you tell me what did we get under this? I can't quite see it clearly here. It looks like we didn't, because that's the long I'm looking for. Well, say Laguerre. Trader Lab didn't take it out, huh? Bums, right? So the goal here was to just tick this and get reversal. So no trade for me, but this is the trade I'm looking for, and to come back there, right? So it just didn't do it. So, and this was the location. So you can kind of see how the auction works. It doesn't mean anything more than this trade didn't settle based on my rule, which is stop pick. It's like pick first, ask questions later. Hope you're getting something out of this. Please give a like if you're visiting in YouTube. And Nick, as far as a week low, I'm not sure exactly what you were referring to, but when you have stops, I'm not sure which one you're referring to, but when you have stops piled up, the market will often go into those stops. And then in Trader Lab, what I like to do, at least what I found, because it used to be my stops all the time, I said, well, that's interesting. Maybe I shouldn't do that. In fact, maybe instead of putting my stop with everybody else's, maybe what I'll do is if I have structure and I come outside and I want to come back for mean reversion, and then up here, remember, I want to come out under here, get the stops, and then if I see exhaustion and absorption, then get long for the return to there and there. So that's a trade. Didn't happen, doesn't happen. But you could see the process, I think. Yeah, Sandor, not only was it a different era, but when I did my charts, we did them by hand because we didn't have computers. We didn't have an internet. We would get a chart book every week. Every week you'd get a book that had every market in there, and it was a night. And then you take your ruler and your pen or your pencil, typically pencil, and we didn't have candles back then yet, so it was open, high, low, close. Bar charts. You know, I still think of them as bar charts, even though I don't have bar charts anymore. But we really didn't get into candles until mid 80s, 86, 80, I'm trying to remember. I think it was 86 or 87, but I can't remember anymore. Steve Nissen, I think, got very popular. He wrote a book on candlesticks. It was all very interesting about the Japanese and how they used it for trading rice. You know, it was just very interesting stuff. Um, the chart is clean. Are you guys asking about this Trader Map Lite? Why is this a clean chart? This is the regular ES chart. It has this bracketing algo, which is a real mess. So it makes this chart, can't trade off of this anymore because it just distorts everything. So this has a built-in filter in it that takes that out. And it's part of, I think it's Global Plus. I don't really know, but you can all check this out. And it's, and there's a couple of these. There's this one for ES, NQ, RTY, I think maybe YM. That's like plug and play. And then there's a customizable one that you can tweak and tune and, really get in there with the screwdriver. And that's the regular TraderMap Pro. So we have TraderMap Pro, TraderMap Lite. This one is just very simple, and it works really great. So, standard, high sensitivity, low, you could do whatever, you can just plug it in, play it. It's a great thing. Now, TraderMap Pro, which I'm not going to turn that one on. I think I'll just leave it at that. But there's so many tools in Bookmap that can really help you out. Um, it's just, for me, it's been a real game changer. Because before I had order flow, I was really using, short-term charts. I was using Renko charts. And so I could never execute I could not read this. I had to, wait longer. So I had more risk. So I'm just saying, made a big difference for me. Yeah, this would have been nice if we would have picked this off. Well, we are trying to go here. So anyway, the trade did not set up close. No cigar, Now this is a trigger, but for me, I'm just saying is, whether or not you want to take this without it taking the stops, that's your call. This is a micro structure. I'm going to show you the trigger. And again, it's not a trade I find, for me, that if it isn't right, then I don't do it. I just don't. It's not that important. I'm not sitting here like, oh, I got it. If you're feeling that sense of urgency, that's FOMO. So I just don't got it. I just go, oh, next. There's so many trades that come by during the day. So what this is, what I do is I will box these out because they're consolidations. And if I come over here and look at this one, the outside edge is right down in here. So this is like support. But again, for me, I want it, when I say I want is what my setups require for me, at least the structured trades. I obviously, as a trader, I can do anything I choose to do, but let's just say for this scenario, if it came here and I saw stops come out, I see the icebergs, and I get a trigger. I'm going to show you the trigger in isolation so you can see it. So you know what a trigger looks like. So a triggering structure for me is, so like this is a trigger also. Here's the volume, and I break. So this becomes resistance. What's this over here? This is a trigger. Break. Resistance is right there. Now I have another trigger. Resistance is here. See? And the volume is in there. Break. There's resistance right there. This is fractals and microstructure. Now I come down here. Chop, chop, chop. I break high. Now, here's how this works. You should screenshot this if you're interested in the fractals. What does it say? Let's talk language. If I don't use indicators, I got to figure something out here. How do I do it? I speak market. So what does the market say? Sellers are here. Aren't we going down? That's what I thought. Well, what do I know? Sellers are here. Buyers are here, which means the sellers are here. The buyers are here, but I don't know it. I know the sellers are here, but I don't know where the buyers are. Because right here, it looks like they're going to keep going. When the buyer is over the seller and the buyer is over the seller, the teeth will chatter a little bit. I'm still looking for these sellers to take it lower. When I break high, pull back and do this, that's a buy trigger. But again, and then where am I trying to go? Well, you already know. Is that a trade you should take? Well, if it's part of your plan, yes. And if not, no. This is Trader Lab. So, you'd be going maybe for 72 up to 87. I don't know. Does that work? I don't know. But if it's not qualified, you can't do it. If you actually are going to rate yourself on following your plan versus gambling, it isn't the one trade that gets away. It's all the trades over a career. And the traders who follow their plans are the ones who have the best opportunity to stay in the business. Because what happens is if you start not following your plan, you're now feeding Hyde. Hyde is Jekyll and Hyde. Hyde's the lunatic. We talk about Hyde in Trader Lab. And if you feed Hyde, in other words, you respond to FOMO, not following your plan, and you get paid, what does that do for you? It may be the ticket out the door. That behavior will take you out of the business, not this one trade, you say. But we live and die on, I coulda. You get very myopic, as opposed to just thinking like a business person who has a business. And your job in your business is to wait for the conditions that give you the statistical edge. Even if this trade works, did it have an edge? Didn't have the same edge as if it would have taken this out and then given us the trigger. But what's also good about this, other than, maybe not fitting a specific trade plan that someone might have, is seeing you guys can see the behavior. This is what auction market theory is. This is how the volume profile and understanding it, what it might be saying, and it's always maybe, how you can do something and maybe differentiate yourself from what other traders do. And it's not so much what they do, it's what the result is. So and we all have winners, so it's not about having a winning trade. One of the things I found out, unfortunately, it took only a few years to figure it out, was that I had winning trades like you have winning trades. And I thought all I had to do was work harder and make more winning trades. It sounds so simple, right? So logical. So I kept tweaking and tuning, adding indicators, mixing them around, different time frames, all that, because everything worked at times. And I had winning trades. And sometimes, winning weeks, winning months. But over time, it kept breaking down. So I was constantly trying to fix it. And then I went to systems because I thought I could do better with optimization. So it was on steroids. So, it was just sort of a cascading problem that I tried to solve by doing more of a process that was actually defective. But because of the random winning trades in there, I thought it was just doing it better. I mean, that's probably what most of us think, right? That's what I did. And unfortunately, there was no information when I was doing all this because you bought a book. That was it. Imagine trying to learn the trade from a book. I don't know how that's worked out for you. It didn't work so good for me. It just added to going down more dead-end alleys and waking up a trader Groundhog Day. So it didn't work. And I did go to a few seminars, which were very expensive in $1980, where you'd actually fly to some city and stay in a hotel. And that was real useful. I got some frequent flyer miles out of that. Anyway, guys, I hope you get something from this. By the way, this is the Trader Lab. If you're interested in Trader Lab, it's a community of like-minded traders that have come together to leverage their collective experience. You're all invited. There's a link in the bottom of YouTube. There's no cost. You can see there's a lot going on in here. It's very interactive. A lot of dialogue, charts, discussions of trades, ideas, jumping up and down, everything that goes on, and it's fun. But it's definitely all about the business. It's not romper room. It's a serious community. And there's a library of webinars. Why most traders using indicators fail. Are you a gambler? What? Trader Groundhog Day? I know. Are you trapped? I was. I kept waking up in the same place. So I kept thinking, let me keep doing it. I'll do it better. How many years do you keep doing that before maybe the light bulb goes off? Maybe I can't do it better. Maybe there's something wrong with what I'm doing, not my intent. Don't forget our target, not a trade recommendation. This would have been a nice trade. If you're in Trader Lab, you would know about this trade. And if it fits your parameters, I don't know about you, but this would have been a nice trade. And again, it doesn't fit my parameters because I'll just wait for the next bus. Is this something you might like to learn? Please give a like. Please give a thumb up. Come to Trader Lab. Say hi. I'd like to meet you. Trader Lab is for serious traders. Whoops. It's about the business. If you're interested in the business of trading, come on by. Say hi. Introduce yourself. Thanks again, guys. Have a great day. These streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, screenshots, circles, arrows, build out your trade plan, review, and then and there's much more in the Trader Lab, not to mention the Bookmap server. There's education on stocks, options, crypto, order flow with a high-tier tool like Bookmap, market maker behavior, algorithmic behavior, and so much more. Hopefully you'll click the link so you can come by and say hello, introduce yourself. It's a great community. Look forward to seeing you there. Have a great one, everybody, and thanks for visiting the Trader Lab. Please give a like on the way out. See you soon.